Hey, good morning. Michael here with Helios Capital Investments, and gonna run through a little project that I'm working on. I'm a pretty much a multifamily guy and pretty much like to do buy and hold, but I found a little flip that I've underwritten and kind of want to go through a step by step to show you how I go through my process. Of course, everybody does it a little bit differently. But anyhow, this price they're asking 169.94. It's there's units on it. There's a duplex, which is the house in front that you see, and then there's five little individual one-bedroom houses. So the duplex has 2 bedroom, 1 baths, and the houses are 1 bedroom, 1 baths. Not going to go into the details of everything here. The reason I'm looking at this as a possible flip is there is going to need to be some work done on it. I've factored in about $80,000 for some foundation repairs and upkeep and everything else. Right now, only two of the units are rented, one at way below market price because of the condition, and the owner is living in one of the other units. Um, I believe I can get in there, get the units going, and get them rented as they come up. I can just keep getting them rented. So the way I've looked at this is the current income, the projected income, and potential future income based on where I see the growth in market and everything else going. I have figured, purchase price, and that's not necessarily what I'll offer. ARV at 335, which is after the repair value. Now, I believe this number to be significantly lower than what I can do for it, but comps are a little bit difficult, and I'll show you what I mean. There's a couple three comps that are pending right now that were on and off the market in a pretty quick amount of time, and I actually had spoken with the brokers on one of those comps, and he was getting multiple offers and interest on it. So I expect it either sold for or above what they're asking based on that. And based on and I'll show you some projected numbers based on what I think rents can be and everything else. I believe I can probably get closer to $100,000 more for this property when it's all said and done. But if you're looking like in the last 6 months for multifamily within this area, it's been difficult to find those, but there's some things that are going to be shaken loose pretty soon. I also figure to get into this property, I'm going to need 125,000 cash to get into it. And I found financing for the balance of it, which I'll go through on a different sheet. And I put down 9-month rehab. I put into the spreadsheet 12 months operating costs in the event it does run long, but the target is a 9-month rehab. So, and again, this is just some, and I've got, based on these numbers right here, 15 to 17% ROI, but I'll talk a little bit more about that on one of the other sheets. And one of my other sheets, I calculated it was about 94,500 for improvements. One of the foundation issues I believe has been addressed, which will take about $10,000 off of that number there. And if we do run a little bit short, once the income starts going up, we will have some cash to do other things as needed that I'm not even factoring into our returns, because I factor in basically our returns at the completion of this project. And when I say we can factor that in, because the current cash that we're getting on that property is covering the expenses, not the debt service or anything else. I factor that in into the money that we need to get this going. So the operating cost. So I'm going to go ahead and stop sharing this one, and I'm going to bring up another one real quick. Let's go ahead and do, we're going to do this one because normally when I do these sheets here, they tell me what my long-term, cash on cash return, capital, and capex and everything else, cap rate is. But on this particular one, I'm not going to use it as I normally do. I just use it to punch in some numbers basically from sales price, debt service, and expenses and income. We're not going to worry about value add. We're not going to worry about the yearly numbers on this particular one because I've done some other worksheets. But if we went in at 155, I did find a private money lender because it is a rehab property, and it's just easy to get private money to go in this. So we pay a little bit more interest, and we will pay some points on this. but we can get in, we can get out. So it's really, if you factor these in and everything looks good, it's no big deal. And we can do it real quick, which is also a plus. So he will be willing to do a 90-10 on this particular project. Normally when it gets in the commercial, it's 25-75, but on this one, with the relationship that I've built with him, he said, yeah, we can do a 90-10, smaller numbers, no big deal. I factored in my cost here, including the points and including the holding cost. And I come up with 121, a little, 121. So I factor 125 and we've got it covered. That gives us just a little bit of wiggle room. This is going to tell me what my debt services is. This is the basic expenses on the way it is right now. Per year, taxes, and I believe that insurance is actually a little bit high. Management on the tenants that we do have there, which will go up a little bit because of as we get these additional units rented, that'll go up a little bit, but the number of rent will surpass the added expense here. So we'll still have cash flow that will come into us after the fact. So not only is it covering it now, every penny that we put into it afterwards, it's going to be even better. There is a utility charge I don't expect to change, because what we will do is, as these units come on, we'll put into a RUB system, which is a ratio utility billing system. So any of the common water, trash, sewer, a percentage of that will be billed back to the tenants over and above their rent. So we'll keep the rents a little bit fairer, market value, and then add 20, 30, 40, 50 bucks, whatever it is per unit. And I have a formula for that, and then we'll go from there. Again, we're not worried about this right now, but there is potential for some growth under to the units. There's either storage ability or laundry ability, or a combination of both, which will give us some added value, or the next owner some added value as we get prepared to sell this property. I'm going to go into one other screen share here. So if I was looking at this property in the future to purchase, and if I had 335 up here, the numbers look very attractive. Like I said, that 15 to 17, actually it's at 350, it was at almost 26% return on investment with a good monthly cash on cash return. With the numbers that I project it will go up, and this is not the high number, this is the market value number. Based on this number alone, we're going to be able to get a higher sales price. And then the comps, and I'll show you those in a minute, are, if they come in as I expect, which these comps will probably close in the next 30 to 45 days. Some are ready to close, some just went into escrow. I expect that they'll be able to validate, not only will this number create the validation for a higher sell price, but those comps will create a validation for it as well. So if I was looking at this to buy 441, this right here on a traditional loan, 2575, 30-year, 4%, appraisal, inspection, attorney fees. Of course, there won't be any really any CapEx because of the condition we're going to leave it in. So I, as an investor, would come in with 119,000. My yearly expenses would be, taxes, insurance, management, vacancy potential, repair potential, even though it's going to be in condition, that utility bill, 18.4. And by the time we get to the end of the day, it puts us at a cap rate of 8 and a cash on cash return of 15%, which is very appealing. You might even wonder why in the heck I'd be selling it, because that cash on cash is obviously going to be much higher after I'm done. But the partners I have in this project, I'm going to go in, we're going to get this done, we're going to get out, we're going to take that capital, and then we're going to reinvest it in some other projects that we've got our eyes on. So that's where we're at on that. I'm going to run one other, set of numbers here. Yeah, I didn't actually pull up. So I'm going to actually minimize these real quick. I'm going to pull up a different number here, and give me one sec. And I have a little return on investment worksheet, and normally I do these on a, okay, so let's go share screen, make sure that I got this here. Normally I would do this investment worksheet, don't pay attention to these numbers right here. I normally do it as a long-term investment, but um, you know, this return on investment for the 125 with the agreement that we have with the person that's bringing in that money, if we go in with a 441, they're looking at a 45% return. So I factored, here's the 45% return. I factored 350, which I is more than comfortable with. We're looking at a 26% return on that. So this is going to be a nice little project to go in, get out within 9 to 12 months, hopefully closer to 9 months. And just wanted to show you the process and how we did that. I was going to show you real quick the comps. So here's how I came up with comps. So I'm going to start on this top one here. This is a duplex. Of course, a duplex is not comparable to 7 units, but this was an area. Most of the duplexes up to this point have been selling between 100 and 150. This particular duplex was on the market for a little less than 90 days before it went pending. They were asking 230. Obviously, I don't know what it went for. It could have went for a lot less after being on for 90 days, but chances are with the market that we have, even if it was discounted, it was probably still above 200, which makes that duplex, that's 100 grand a door. So let's get something that's a little bit more comparable. This right here is more comparable. It's getting closer to it. It's 5 units at 315. I actually was looking at this property and called, and this guy had so much interest, so much activity on it. He wouldn't even share the income and expenses on this property unless you had an accepted offer. So that tells me that I'm being flooded with inquiries. Don't bother me unless you're serious. If you're serious, put in an offer. Subject to, we'll make it, we'll accept that offer. We'll provide you with the documents which they felt comfortable with, would validate whatever price it was, and then move forward. I chose not to do that because I had other ones where I didn't have to put an offer in. If I truly wanted to, then I could have done that and protected myself. But this one at 315 is about 63,000 a door. This is much closer to the complex that I'm looking at, 5 units versus 7. The makeup is a little bit different. I think this is 4 1-bedrooms and a 2-bedroom. I have 5 1-bedrooms and a duplex with 2 1-bedrooms. So again, 315 was what I put on my low. Obviously, if they got 315, if the market continues doing what it is, we should no problem be able to get 315. In fact, with the added unit or units in this case, we have another 1-bedroom and another 2-bedroom. That's easily, that's why I put that 350 number down, because if this comes in, that would be the bottom of it. And I do believe with the numbers and everything else, we're going to be closer at 63,000. We're at that 441. So even if we just compared at door cost. And we've got one more here, which is going to be, I'm really also interested to see. This is an area that's a little further out. Again, 6 units versus 7 units, but they put it up on the market for 439. And this was on the market for less than, I think, 4 to 6 weeks before it went pending. So again, what this tells me is the market is hot. People are getting what, either what they want or over. And we've seen that in markets across the nation. So at 439 for 6, obviously, if they get that, and this is a good comp, good viable comp for our property, that would actually put my 441 a little bit low based on this number. So I believe that, we definitely hit that 26% return, which is incredible, but probably get closer to that 45% return on our investment. And then we can take that and we can use that income that we get off this for another project. So anyhow, that's this project in a nutshell. And if you have any questions, pop me some messages and I'm happy to answer. Have a wonderful day. Mahalo.